I'm Alexandra Lienhard with Elliott Wave International, and I'm talking with Jeffrey Kennedy. Jeff is the editor of EWI's educational service, Traders Classroom, and also edits our commodity service, Commodity Junctures. Jeff, thanks for chatting today.
My pleasure, Alex.
So you spent a good portion of your career actually helping other traders learn more about Elliott Wave, technical analysis, and trading. What's drawn you towards the teaching side of Elliott Wave analysis?
Well, Alex, I guess the best way to answer that would be I love teaching. I love helping people. And I think more importantly, what I really enjoy about the teaching aspect of what I do is I hope to help traders avoid some of the pitfalls, the common pitfalls that we all encounter as traders. And I know I certainly encountered a number of pitfalls when I first began trading and analyzing markets 10, 15, 20 years ago now.
And your educational service is called Traders Classroom. In a recent lesson, you talked about the 4 critical elements of high confidence trading, and then you actually went through and showed an example of how you use that method to make a forecast. Can you give me a real quick overview of what that lesson entailed?
The 4 critical elements. Absolutely. It's very simple. It's kind of like each aspect represents, say, the 4 corners of a chair or the 4 tires of a car. I start off with trend. I want to do my trend analysis. So if I'm looking for an opportunity, I want, no matter what market, whether it's a futures market or a cash market or an individual stock, I want to see what the overall trend is. And many times I'll simply look at the weekly chart level. And if prices are moving up from the bottom left-hand corner of the price chart to the upper right-hand corner of the price chart, the trend's up. And that being the case, I want to play the buy side. If the prices on a weekly chart level are, say, moving from the top left-hand corner of the price chart to the bottom right-hand corner of the price chart, then clearly the trend is down, and I primarily want to be more of a seller of the market. I like to trade in the direction of the trend because it's simply the path of least resistance. And most of, I think, your long-term professional traders, some of the traders I've read about in, say, the Market Wizards books, tend to be trend traders. They tend to trade in the direction of the trend. Again, it's the path of least resistance. The next step is pattern analysis. And this is where the Elliott Wave principle comes into play, because R.N. Elliott identified that stock prices move in recognizable patterns. And he identified essentially 2 categories of price moves or of patterns: motive waves and corrective waves. So as an Elliottician, I'm working with 5 specific patterns primarily: the impulse wave, the ending diagonal, the zigzag, the flat, and the triangle. So then after I do my trend analysis, I like to do my pattern analysis or my Elliott Wave interpretation of the price chart. Typically at that point, it's going to be on the daily level. And then I follow that up with momentum analysis. Just as there are patterns in price, there are also patterns in momentum. And there's a specific momentum signature within the development of a lot of these Elliott Wave patterns. For example, most traders understand what the term bullish or bearish divergence is. Well, this tends to occur between the extremes of, say, wave C and wave A of a zigzag or a flat pattern. So step 1, trend. Step 2, pattern analysis. Step number 3, momentum analysis. And then step number 4 is Japanese candlestick analysis. I'm a big fan of Japanese candlesticks in the work of Steve Neeson. He's the gentleman who essentially introduced Japanese candlestick analysis to the West. And the reason I like that style of analysis is because it allows me to zero in on the most recent price action, and also it allows me to identify some levels to trade against, entry points, protective stops. One way I like to kind of describe the difference between, say, Japanese candlestick analysis and the Elliott Wave principle is the Elliott Wave principle provides that large context of market action. It's a good way to look at a big chunk of time, say 3 months to 3 years to 30 years. And the Elliott Wave principle allows me to put that price action into a very specific context. Japanese candlestick analysis is much more precise. It allows me to identify what's going to happen over the next 2 or 3 price bars or the next 3 or 5 price bars based off very specific 1, 2, or 3 candlestick reversal patterns. So that's my overall approach for identifying a high confidence trade setup or making a forecast.
You and your colleague Wayne Gorman wrote the Visual Guide to Elliott Wave Trading, which is a Bloomberg book published by Wiley and ended up becoming an Amazon bestseller. When you and Wayne were going through and writing that book, what was your inspiration and what did you ultimately find to be the purpose of the book?
Well, the whole purpose behind that book is to show people how the wave principle is indeed applicable, not only from an analytical point of view, but from a trading perspective. The Elliott wave principle, written by Frost and Prechter, is the single best source for information on the Elliott wave principle, hands down. But the book that Wayne Gorman and I wrote, The Visual Guide to Elliott Wave Trading, we actually take the next step with the wave principle and show people how to apply it, not only from an analytical point of view, but also from a trading perspective. We actually provide specific rules and guidelines for entering, where to put an initial protective stop, and also how to combine the wave principle with other forms of technical analysis, indicators and oscillators. More importantly, what was really exciting about the book is that much of the material in the book are based on real-time, real money trades. So we wanted to kind of show people that, yes, this stuff actually does indeed work for traders, and here's how best to actually apply it.
Thanks for chatting, Jeff. If you're interested in learning more about Jeff's services, register for our free event, Trader Education Week, through the link below. Once you register, you'll get free access to Jeffrey's April 14th Traders Classroom lesson titled The 4 Key Elements of High Confidence Trading. Thanks for listening.